Hey guys, thank you for stopping by. Don't forget to subscribe, like, and share. And I hope you enjoyed this interview. All right, welcome back to the program. My guest is joining me right now. He is Mr. Eche Stephen Idoko. He's the Publicity Secretary of CORAN. That's the Crude Oil Refiners Association of Nigeria. Welcome, Mr. Idoko, and thank you for joining me.
Thank you. Welcome.
Now, let's start by asking, this is your organization. How long has it been existing?
Okay, so formally, we've been around for a while.
What
But
time is a while?
a while, so we've been around for, say, 6, 7 years.
Okay.
But then we became formally registered because what happened was that there were quite a number of us with fragmented efforts. We had different associations pushing for the interest of local refiners. But sometime in 2016, 2017, the then Minister of Petroleum, Dr. Ibe Ikachukwu, had called everybody, all of the stakeholders together and said it was good for us to consolidate efforts so we can speak to the government in a single voice. So after that meeting with the minister, all the various associations converged under the name of the Crude Refineries Association of Nigeria. And then we started the process of registration at the time. And then we got registered. Usually it took a while with CAC. And then we got registered sometime in 2020, 2021, thereabout. And then since then we started operating by the name. But of course, the advocacy program had been on for a while, as far back as 2012 to 2015, advocacy had started.
Okay, I needed us to. So because I hear a lot of you guys in the news now, so I was wondering, what's been happening, but thank you for that explanation. Now, the recent policy by the government, FEC adopted that crude oil should be sold to you guys, because it seems that Dangote is on his own, you guys are on your own. Anyway, we'll come to that later, because even when it's been reported, Dangote and other refineries, but the policy of government to sell crude oil to you guys in Naira, what I mean are local refiners. Have you started receiving crude now?
Okay.
It's about 2 weeks now, isn't it?
Yes, it's been 2 weeks. So, and then maybe in answering that question, in trying to answer that question, I will also try to explain the dichotomy between Dangote and ourselves. So when we started initially, it started out, you had the modular refineries on the one side, and then they had the conventional refineries, and at the time, only Dangote was and is still the only conventional refinery that is building at the moment. A good number of others are modular refineries. Modular refineries are basically refineries that are built in modules and in skids, and then they come and assemble them. And usually they run between the sizes of 100 barrels to about 30,000 barrels per day. Anything above that usually is considered not to be a modular refinery anymore. So there was that dichotomy initially. But when the association came, what we did was everybody came under one umbrella. So I would say that Dangote is also a member of CORAN now, an active member at that. So that was where
he's a registered member.
Yeah, he's a registered member of CORAN.
When did he become that?
So he became a registered member of CORAN early this year.
Okay.
So he actively participates in our meetings and our engagements. So yes, so we have just one umbrella body, but I'm sure with the regulators, for purpose of clarity or for whatever reason it is to them, they would always refer to Dangote and others. But at media outings like this, we try to correct that you don't only have Dangote playing in the field, you have a lot of other refineries. As a matter of fact, the oldest refinery, the oldest privately owned refinery, because I've seen narratives like the first privately owned refinery is Dangote, but that's not true. It's that the oldest refinery in Nigeria is actually Aradel. It was called the Niger Delta Refinery at the time, started as a 1,000, then increased to 5,000, and now they are doing 11,000.
That's the NDPR.
Yes, the NDPR, but it's now called Aradel.
Aradel.
Yes. Yeah, so they renamed. So we have quite a number of those refineries.
So Dangote is not the first private refinery?
No, it's not the first private refinery. So we have all those now.
How about the first private single refiner? Because he's also been addressed as that.
As the first private
single refiner.
I don't. What does the word single
That
refiner
I'm
mean? Because
asking.
The refineries are all incorporated body. They have a board of directors. They have shareholders. I'm sure Dangote is not just the only person that's a shareholder in Dangote refinery. So I don't know what that definition is. Maybe I can speak to that if I understand what that definition exactly is. But as far as it's concerned, we have a body. And, you know, the danger in addressing Dangote before you address other refiners or addressing Dangote as the face is that it begins to feed into the fear of the narrative that Dangote might become a monopoly. But as a matter of fact, he's not the only person who is refining. He's not the only person who is in the refinery space. And whatsoever the policies are, of course, and I know that the governments are aware of this, whatsoever policy that is being formulated is designed to actually address all the other refineries who are operating in this space. In fact, the presidential, the interministerial committee's recommendation that came out clearly spoke to that fact that whatsoever it is that is to be enjoyed by the Dangote refinery should be enjoyed, but should be extended to all the other refineries. That was categorically stated. So we have more than just Dangote as a refinery.
Okay, so back to the question around if you guys are receiving crude now.
Okay.
And if you started paying Naira for it.
Okay. So, yes, the receiving crude is not just that straightforward. There's a whole lot of back processes involved in receiving crude. They definitely have to be a guideline to, that would govern the receipt and the giving and receipt of crude. The NUPRC, sometime even before the President's pronouncement, had issued a guideline, the Domestic Crude Supply Obligations Guideline, that mirrors the provision of the PIA on supplying crude to domestic refineries as a first priority before you can actually export. That guideline also, which was a guideline all the stakeholders painstakingly participated in. We were represented. The OPTS was represented. The independents and IPPG was also represented. And that guideline says that the purchase should be on the willing seller, willing buyers arrangement. To the IOCs, some of them did agree that they agreed that there was a need to make some concessions to sell crude in Naira, but it was going to be on a percentage basis. I think those percentages are supposed to be agreed by the parties on the willing seller, willing buyer basis. But the part that the Naira applies to, from our understanding, was that part that comes from the government's obligation. And particularly the 450,000 barrels that hitherto went to the non-functioning local government-owned refineries was what was supposed to be recharted to us and to be sold in Naira. As far as we in the modular space are concerned, I don't know of any of the modular refineries that have received that yet. I'm sure the conversation is ongoing, and maybe in the course of the month, or so to say, maybe they would get to us. But right now, as we speak, not one of the privately owned modular refineries have received. I know that Dangote did come out recently to say that they have received some percentage of their crude from government, about 60% thereabout, of what they need. I don't know if the percentage they had received was covered by that Naira. Our secretariat have not been advised on that, so I would want to presume it was still the dollar arrangement. So I don't think the Naira bit has started operating
So
yet.
what kind of process is ongoing now? Are you saying that since the president made this announcement that everywhere has just been mum?
I know that there are quite a number of activities that have been going on. Recently, we had a stakeholders engagement where a lot of things were discussed on fees and pricing. And one thing that was prominent in that conversation, which was also an extension to the whole dollar pricing for crude, was that all of our payments and levies to the government in this segment were predominantly in dollars. And in that conversation, we told them, if you want us to, we are playing in the local space. We are selling and our receivables are in Naira. We don't see why we have to be paying levies and licensing fees in dollars. We had that stakeholders engagement a few weeks ago, it dovetails into this conversation as well, and we had made that known to the regulators. But then, of course, the feedback will always say the buck stops at the table of the minister. So we're expecting that this kind of conversations and a few more that are supposed to come, because I know that we've received an invite to also come and rediscuss the DCSO, that's the Crude Domestic Supply Obligation, sometime later this month. I'm sure the issue of Naira and dollars will be also discussed, and they want to mainframe that into the guideline that had already gone out before the president's pronouncement. So we want to hope that that would form part of our conversations when we meet with them.
Yeah, because like you mentioned, it's crude oil, especially what my people are saying now, what my audience is saying, is crude oil for Naira as simple as it is. You know, because when when the president made this that announcement, I looked at all of that. I said, okay, fine. You've also raised the issue of availability in terms of the question for me on that issue is that that 450,000 barrels per day for local refineries, is it available? That's one. The second question is the challenges around, you know, receiving crude oil for Naira. Is it as simple as it is, in the sense that the hurdles is an incentive to you guys, as it were, one way or the other, but there are also hurdles around dollarized regulatory fees, royalty fees that are in dollars. Then the issue of IOCs itself, IOCs that, can the FG just order IOCs to sell their crude, and in what currency?
Okay,
You know, so 3 questions.
Okay, so basically to answer that question, I'll answer in one, using one approach. You see, the sales of crude, the whole idea of sales of crude in Naira, it's not exactly a benefit to the local refineries. It's actually an intervention. We have a crisis. The crisis we have is that we have shortage in supply of petroleum products in the country. And the government is labored, you know, with the burden of finding effects to be able to satisfy the country's demand. And an option to this was, okay, look the way of local refiners. And local refiners are saying, okay, look, we can deliver refined petroleum products to you at a reasonable price that won't be so much of a burden to the people, and also ensure adequacy. But in this, you need to meet us halfway. And what do we need to be able to do this? If we can't be pricing these commodities in dollars, because if you price in dollars, it puts pressure on Naira, and then of course affects the end user at the pump price. So the idea of having to sell in Naira was to address the critical challenge we had with adequacy, yes, and FX. So it's more like the government intervening. And in what happens,
intervening to save itself.
Yes, intervening to save itself.
Not an incentive to you guys.
Not exactly an incentive.
Is there no incentive at all to you guys?
We are in business, so of course, if they do that, we'll be able to sell. Do you understand? At a good price. But the thing, because it's a market, it's demand and supply. If we go to town and we supply and we get dollar, we can only sell to the people at the price at which we buy. So in the long run, it is actually an intervention by government in which government would benefit, and ultimately the Nigerian population would benefit. So the whole idea of selling crude in Naira, it's not because you want to help the refiners, strictly speaking, as most of the narrative out there has made it, is that there is a need to actually intervene in the burden Nigerians are carrying. At the moment, the Naira can't keep up at the rate of the demands, apart from crude, apart from using FX to buy petroleum product. There are other things that are in demand, and you should know that about 40% of our FX goes to, you know, servicing purchase of imported petroleum products. So if you begin to sell in Naira, and the crude you sell in Naira is refined and services the domestic need, you are taking 40% load off the Naira, and that will create a significant amount of appreciation in the strength of the Naira.
I'm just thinking a bit mathematically now, scientifically, that if you guys now sell, you refine, perhaps you also sell to the Nigerian market or whatever it is, you will sell in Naira, isn't it?
Yes. In fact, in fact, that the recommendation for us to sell, to buy in naira also came with a rider. The rider was that for the quantity of crude we buy in naira, we would oblige to sell all of those in the local market in naira. Yes.
And there was also a caveat there that I saw what the president said, the duration of this transaction will be at a fixed cost.
Yes.
I don't know if you can explain that.
And see, that is the details I said would have to be worked on from the back end. So what they would do was to cap the exchange rate, you know, cap the exchange rate.
Peg it for you guys at a certain level.
Yes, at a certain level, because you know, of course, the naira is allowed to float now. But then you have to cap it, if not, because if you don't cap it, you haven't solved the problem in itself.
Of course, it will be oscillating.
You cap it at a particular rate. And that's what we expect. But I can't speak exactly to how that is going to play out, because, like I said, there's still a whole lot of conversation that has to go into this to make it an effective and operational document.
Okay. You know, I'm just thinking through this, and I wonder the kind of conversations that will go in that room when you guys begin to converse, perhaps with NMDPRA, isn't it?
Yes, in this conversation, it's not just only the NMDPRA, because on money matters, of course, I want to see that at some point we would discuss the central bank, and maybe to an extent the Ministry of Finance. Because it's a monetary and fiscal policy.
The central bank, in the sense that what will the pegged price be if they would also give you guys a discount, as it were? There are so many questions coming to my brain right now. One of those is really, if you guys get all these teething issues out of the way and you are going to sell, I wonder how you're also going to juxtapose that the price you're going to sell in naira against the international crude oil price. I hope you understand what I'm...
Yes, I understand. And you see, you see,
that it will not also be a loss, sorry. It will not also be a loss to the IOCs and even to the government.
So let's get these conversations right now. The naira sales, at this stage, primarily has to do with the government's own equity in the production. Because there are two things, and we have to be careful. So on the one breath, the guideline says, and the PIA says, that the sale of crude has to be on the willing buyer, willing seller arrangement. And then also, based on the WTO trade policy guidelines, it has to be a free market. So the government will have to be careful in that breath. So we can only speak to what the government controls. The IOC, it's their crude oil. But what it means is that, what this pronouncement means is that it opens a window of conversation with the refiners and the IOCs they are speaking to say, see, we can have a conversation around doing this transaction in naira. Do you understand? So it opens that conversation. But on the part of the crude equity that goes to the federal government, he's saying that for my own crude equity that I'll be giving you guys, I'm giving to you in naira. So it becomes a purely domestic arrangement. And I don't think that we should concern ourselves so much with what is happening in the international market. The whole idea, and
crude is an international product.
Yeah, it's an international, but of course, this intervention is meant to address a local problem. We have a local problem, and what we keep saying is that our watchword in this is that we should begin to think for Nigeria and work for Nigeria. So we want to make the Nigerian man on the street feel the benefits of coming from an oil-producing country.
Without fuel queues.
Yes, exactly.
Okay. Let's talk about some of the challenges that you guys are facing, perhaps challenges around feedstock, challenges about even energy transition issues now.
Thank you very much.
You know, as to how it will even impact getting financing, because the world is talking about energy transition. Nigeria is still talking about giving crude to local refiners. Of course, you're not going to do that even totally with your own money. You're going to get monies from, you know, from lenders and all of that. So how are you guys looking at all that? Okay,
thank you very much. And I would want to start with the challenges of financing, which was one of the major things that was put before the government. Somehow, before COVID-19, we started getting feelers. The campaign for for going green and to transit from fossil fuel became louder, and it became a lot more difficult to access finance in finance from the Western world. And that at that point, we started having conversations with the government to see how we can look inward, to see how to ramp up refining in the country. It may interest you to know that as at that time, about 40 refineries were licensed. Out of that 40, currently only about 15 are actively developing. Out of that 15, about 5 thereabout have completed and are operating. But the other ones, the other 10 thereabout are still at various stages, and they are more or less, their development are at slow pace because of the financial requirement. Usually, if you're doing that, your financiers would require two very, very important steps. One, you have to show them that you have a source of feedstock. So by way of a conditional term sheet, or you have a contract in place for the supply of your crude oil. The second one is that you have to at least be able to finance a minimum of 10%, it's usually between 10% to 30% of the equity financial requirements. And so most of these refineries have been looking for this source. Unfortunately, we have the banking sector are a bit averse to funding green refineries, and for those who even want to, the capital requirement is beyond their capacity. So,
especially now they are doing recapitalization.
An average refinery, for instance, will cost you about $100 to $150 million. That's a lot of money for a local bank in Nigeria. That was why we did come up, and the government identified this, and part of that interministerial recommendation was that a special funding should be created to address this particular need, and that every document required to guarantee feedstock should be given to these refineries. As far as I know, up until this moment, we haven't received those documents yet. That conversation started before PIA, and before the PIA, the guideline says that the federal government was going to guarantee 60% of your crude requirements in a refinery. Okay. But then the challenge was that there was no clear direction as to where that 60% was supposed to come from. Was it supposed to come from the government equity or from the IOCs? Until now, I think we still don't have clarity on it, even though the guidelines is there. And these are things that we expect the government should speak to.
Okay, just use like 20 seconds to answer this. We're getting a question from a viewer. Nigeria depends on dollar generated from crude to meet up its import and balance of payments in it. How do you feel the gap of dollars lost by Nigeria to meet its above stated needs? I think I also asked this question earlier.
Okay, so it would come from backward integration. So you see, Nigeria, even right now, one of the challenges we have with adequacy of products is that when the products come, what we hear is that it finds its way back to the West African coast and then also to a part of Central Africa and Cameroon. Simply, PIA has provided for backward integration. So what happens is that now, instead of earning dollar from your crude, you begin to earn dollar from the export of your refined products because you supply the whole West African market, West African and Central market.
That's if we're serious.
Yes, that's for us. And but it's not rocket science. It's not perfect. At the moment, if the refineries now begin to produce in full capacity, we will achieve near self-sufficiency in things like gas, oil, and aviation fuel.
Okay, I think we'll leave it at that. Perhaps we'll continue this discussion on another day. Thank you very much for coming and giving us perspective. Just keep me up to speed with what happens, perhaps from the meetings later, so that we'll know that there is onward movement as to this. It's not just about talking policies on television and all of that.
Thank you very much. Thank you very much.
All right, I've been speaking with Mr. Eche Stephen Idoko, Publicity Secretary of the Crude Oil Refiners Association of Nigeria. We've been talking about crude oil refining in Nigeria, and most especially the policy that the president did talk about selling crude oil to local refiners in Naira. That's the much you can take on today's edition of the program. Please join us again tomorrow, bright and early. I am Nancy Naji. Be the best you can be, and be the change that you want to see. Bye now. Thank you for watching. In case this is your first time watching us, thank you. Don't forget to subscribe to the channel, drop your comments as well as like, and most of all, share our content.